Good afternoon, ladies and gentlemen. My name is Michalis, and I'm the market analyst here at HF Markets. And I'd like to welcome everybody to this week's weekly wrap up. So, this webinar, live stream webinar, which is available on multiple platforms, is looking at all the economic data, the changes in geopolitical tensions, the changes in monetary policy, and what is driving prices both in US and European stock markets, as well as the currency market, and also, of course, commodities such as gold and such as oil as well. Now, as part of this webinar, we're going to be looking at two major sections. First, we're, of course, going to look at what exactly has been driving prices, if something has particularly change, which is going to affect prices and investors' sentiment and risk appetite and the way they view and the bias of certain assets. So this is the first section of the webinar where we're going to look at what's changed, what was released, what was said, and what's likely to happen today and going forward. Now, the second part of the webinar is going to be live analysis. So we'll leave the presentations, we'll stop looking at examples and fundamentals, and we'll go straight to the MT5 and look at different signals, technical analysis, looking at trends, market conditions, and so on and so forth. Now, today's live stream webinar is going to last approximately 40 to 45 minutes. Everybody does, of course, have the opportunity to ask as many questions as they like. You've got a chat on YouTube as well as on Facebook. You can ask as many questions as you like, and I, of course, will answer all questions live on the webinar. But of course, we're not exposed or mention any sensitive information. So feel free and comfortable and feel safe to ask any questions. Now, before we start looking at today's webinar, very quickly, I want to do a quick introduction. It's not important to individuals' investments. It's not important to today's topic, but I do get a lot of questions. So I always go through a very quick introduction so people can know a little bit about the individual who is providing you with this information. Now, a bit about my background. I have been in the financial service market now for 10 years. I originally started off as a financial advisor in London, which I was for 4 years before moving to Cyprus, where our head offices are in the Mediterranean. I've been a market analyst now for over 5 years. And like I said, I've been investing, trading, and in the financial service market, generally speaking, for 10 years now. In terms of our webinars, we of course have webinar series, and each and every webinar is based on something completely different. For example, today's webinar is based on what is changing and developing within the markets. Going to be looking at technical analysis and live analysis towards the end of the webinar. But of course, like I said, each and every webinar is different. Some webinars look at technical analysis, some fundamentals, some even look at sentimental analysis, and more advanced webinars like order flow and institutional analysis as well. Now, we offer all these webinars for free. Everybody has free access to them. You can go onto our website, you can register for free, you get access to free unlimited live webinars, and you can also visit for free one of our educational centers around the world, because we do have educational centers in pretty much every single continent. Now, before we start to look at the MT5 and we start to look at different technical analysis methods, such as, for example, regression channels, trading clouds, trend crossovers, and so on and so forth. What I want to look at is exactly what has changed this week, because we've seen two very different sides of the week. We saw a lot of negative price movement in the stock market, especially on Monday, Tuesday, partially on Wednesday as well. In that time period, we saw very strong price movement on safe haven assets, specifically on the yen and of course the US dollar. The US dollar increased to a new monthly high, the highest price that we have seen in US dollar in over a month. So this was the first half of the week. Now, the second half of the week, we mainly saw stagnation in the dollar, so not a significant decline, but we lost momentum. Whereas when we're looking at the stock market really gained momentum. For example, if we're looking at technology, the technology segment, particularly the Nasdaq. The Nasdaq increased to the highest price it has ever been at. So anybody that has been purchasing ETFs or trading the Nasdaq over the past year for the as a longer term investment is of course extremely happy, as it's increased to the highest price it has ever increased. But of course, we need to look at what dangers there is to that trend. Why is that trend forming? Is there particular dangers which is negative to the stock market that we, of course, need to take into consideration? Now, whether it's going to decline or increase is not necessarily relevant for us who trade CFDs, because, of course, we are able to take advantage and speculate in both directions of the market. However, what is important for us traders is not only to be able to determine how the price is likely to move, but to be able to predetermine how the price is going to move within a specific period of time. So it's not enough to say over the next 6 months, I believe the Nasdaq will increase in value. No, as a trader, especially short-term traders such as scalpers and intraday traders, we of course have to be able to say in this hour, in this 6 hours, in this session, in this day, this type of price movement is going to happen. And this is really what we're going to be looking at the end of the webinar when we start looking at our MT5 technical analysis, looking at live signals and opportunities again on the live market. So what is the first thing that has changed over the past week? Now, some people who are following the markets may have known that all bankers, large institutions, even politicians, such as foreign ministers, we have had heads and presidents of central banks, foreign ministers, all of these individuals have been gathering in Davos, which is a city in Central Europe. Now, this is the World's Economic Forum. It takes place every single year. It continues for 5 days. This year it continued from Monday all the way out to today. Today will be the last day. And it's very important. It's created actually a really big change in the market. And again, especially on Monday, Tuesday, and the first half of Wednesday. Why did it create this change? Because we spoke to pretty much every single central bank around the world and foreign ministers, especially in the European Union. We listened to speeches from the president of the Bundesliga Bank. We looked at presidents of the Bundesbank, also Banque de France, also the Central Bank of Austria, and of Italy as well. We also listened to speeches and interviews from the president of the European Central Bank, Christine Lagarde. All these individuals came out and said something very specific, which was very dangerous to the stock market, which is why we saw such a strong decline on the first 2 days of the week. And this was that in these first 2 days, ladies and gentlemen, these members of the European Central Bank came out and they said that actually investors are overpricing the stock market. Their risk appetite is unnaturally extremely high. And they actually came out and said that investors are pricing in up to 6 to 7 interest rate cuts in 2024. Now, economists towards the end of 2023 came out and they said in 2024 there may be up to 5 interest rate cuts. Whereas when we listen to politicians and bankers in this week's World Economic Forum, they actually said that looking at market pricing, investors are actually pricing in 6 to 7. So they're basically saying in other words that very simply the stock market is overpriced, and we saw a very strong decline on Monday and Tuesday and throughout most of Wednesday as well. Then as well on Tuesday after that, we also got members from chairmen of banks in America, such as JP Morgan, also Goldman Sachs, came out and they said that actually they believe there's going to be 3 interest rate cuts in 2024, and it's not likely to be in the first 2 quarters of this year. So again, another scenario where there's indications of less interest rate cuts and less frequent interest rate cuts as well. Now, because of this, it changed the risk appetite in the market, and it changed investor sentiment and the way they looked at the US stock market, because they were basically saying to them that the stock market is overpriced. Now, in the first half of the week, we saw very different price condition than we did last week. Last week, we saw very strong price movements in the stock market. The first 2 days of this week, we saw a very strong sell-off in the stock market. Now, why has that though changed on Thursday and Wednesday? And this is, Thursday, Friday, and also the second half of Wednesday. And this is very simply, ladies and gentlemen, because when the stock market declines, when investors really believe that earnings seasons are going to be upbeat, companies are going to outcompete expectations of analysts, outperform, and investors are generally confident and they have a high risk appetite. When the stock market declines, what they do is they use this as an opportunity to be able to enter at a more competitive price. So for example, if we've got individuals here, let's say 5 individuals who are purchasing a stock. The first 4 individuals say, I purchased stock at 200 US dollars, and the 5th individual comes along and says, well, actually, I purchased it at 170 US dollars. Most people are going to want to be that 5th individual, and that is a very clear and simple example of what we are seeing. The stock market declined. It declined for good reason, but there is still high demand. And investors, both institutional and retail traders, use the lower price. This is what we know in the market as a discounted stock price. They use that price and that entry level to be able to enter and take advantage of the lower price. Now, why do people want to do that? Very simply, there's only one answer to that question, and that is because of upcoming earnings data. So next week, we have significant earnings data. This week, if we look at point number 4, we've already had some earnings data, but keep in mind, none of these are relevant to the NASDAQ. They are relevant to the Dow Jones, and they are also significantly relevant to the S&P 500. So for example, Charles Schwab is part of the S&P 500, Morgan Stanley, both Dow Jones and S&P. Then we have Goldman Sachs, which is very extremely important, particularly for the Dow Jones. And then you got Prognosis as well. So these earnings reports, we're going to look at it on a different slide. They were mixed, but the sentiment towards the stock market, generally speaking, is the banking sector of the stock market is generally quite poor at the moment, especially due to some of these banks really making public very poor earnings, such as Charles Schwab, and also JP Morgan as well was a good example of that. Now, the other negative factor of the market, which we saw again in the first half of this week, is that inflation in Europe increased. Inflation in the UK increased. Now, you may look at this and say it's only an increase of 0.1%. It's not just about how much inflation increased. You have to look at the current formal inflation rate compared to where it was expected to be. So even though it only increased from 3.9 to 3.4, what was expected, generally speaking, within the market was for it to decline from 3.9 to 3.8. So you can see here there's a big difference, because one is a decrease in inflation, the other is an increase in inflation, and the difference between 3.8 to 3.8 to 4% is a moderate increase. And the more important thing as well is now it's formally confirmed that all Western economies include, and also most of the G7, the only member of the G7 which hasn't seen inflation rise is Japan. Most Western economies, including the US, the UK, and the European Union, have now all seen inflation rise. So again, it's another aspect of the market that we have to take into consideration, because yes, we've got higher, more expensive stock markets, but at the same time, we have bankers and economists mentioning to us that there is a possibility that the stock market is overpriced. And also, they're saying to us that investors are buying into the stock market because they believe there's going to be up to 6 to 7 interest rate cuts, whereas actually we believe there's only going to be 3 cuts, and it's most likely going to be to the end of the year. Now, we're in a scenario now, I can see a question, I'll answer the question in a moment. We're in a scenario now especially in the second half of the week, where people really have their eyes fixed on the fact that there's most likely going to be a soft landing, number one, and number two, that next week there's going to be earnings data. So in the short to medium term, this is what is driving the market because economic data is extremely strong and people really believe there's going to be no matter what's going to happen in the market, no matter the fact that whether we're going to get interest rate cuts or not, the economy is resilient, the employment sector is resilient, salaries are increasing, individuals remain employed, the number of unemployed individuals still remains extremely low. So the possibility of a soft landing is still very, very high. So we're in a scenario now where investors are basically really hanging on and clutching onto the positive data, and then the negative data which they're seeing or hearing, they're ignoring it. And because of this, we're seeing again continuous demand, and an unbalanced demand in the stock market, which is of course increasing the price of most indices. For example, if we look at the past 3 days, we have seen Asian, European, and also US stock markets increase in value. So this is really what has been changing over the past week. Most of it has been related to speeches, press conferences in Davos, but of course we have had economic data, especially from the US and also the UK. We've also already mentioned the UK, but we're also going to have on a later slide looking at both the UK and also the US. Now, the other thing which I mentioned in the previous slide, which I want to continue as part of this slide here, is that the stock market is very expensive. And we can see there's clearly a lot of demand, especially in technology companies, which is understandable because if we're looking at a lot of these technologies, for example, this week, Microsoft became the most valuable company worldwide. They overtook Apple. Apple also, in addition to this, is confirmed they're going to release a new product, which is a Virtual Pro headset in the first week of February. Orders actually started this week, but it won't be available to the first week of February. So that's something which is coming up very soon. It's the first time that we're going to see a product released from Apple in 9 years. So yes, every year we get a new iPhone, we get new MacBooks, we get new tablets, but we haven't had a new product from Apple in very many years. At the first week of February, it will be the first time that we're going to get a new product released from Apple in 9 years. And if you look at the stock price movement of Apple over the past 24 hours, you can see it's increasing in value by 3.5% just in one session. So you can see some real demand there. So, ladies and gentlemen, so we can see there's a lot of demand, but we still have to keep in mind there is a level of risk as well. Because yes, we've had 1 month where inflation has increased in value, but the possibility of a soft landing and the possibility of interest rate cuts are still there. Now, if we're going to get a second month of the inflation increasing in value, that's really where the danger is, ladies and gentlemen. We've had 1 month of increases. If we're going to get another month of an increase, then we're actually looking at the stock market being strongly inaccurately pricing assets, as well as the US dollar and gold. Now, the reason for this, ladies and gentlemen, is a lot of individuals are buying and exposing themselves to these markets because they believe interest rates are going to decline. If we get 2 months of inflation increasing, then there's a strong possibility that there will be no interest, that two things can potentially happen. Number one, there's going to be no interest rate cuts in 2024. Number two, there's only going to be maybe one interest rate cut in 2024 rather than looking at anywhere between 3 to 7. And the last thing is there a possibility of actually the Federal Reserve coming out and saying we're actually going to increase interest rates only by a small percentage, let's say 25 basis points, and this is going to be our last interest rate hike, actually. So in other way of fact, it's not going to be the last interest rate hike that we're going to see in this cycle. If that's the case, then we can see a really strong decline in the stock market. Now, again, this isn't massively negative necessarily for us as traders. Why? Because when we get that volatility, when we get that decline, it creates opportunity in the market through volatility. So keep in mind, if somebody's building a portfolio and they're buying real stocks and looking to keep them in the long term, then a stock market crash and the stock market decline, whether it's 10, 20, or 30%, is something, of course, very negative for them. But even for those individuals looking for building a portfolio longer term, it still provides them the opportunity to enter the market and start building a portfolio at a more competitive price. It's like saying, would you rather buy a house in 2023 and purchase the house for 400,000 euros, or would you rather wait to 2024 and purchase the house for 300,000 euros? Most people would rather be the second individual. And the same thing applies to the stock market and individuals looking to buy and build portfolios. But for individuals trading derivatives, individuals using leverage, you're still able to trade that volatility and speculate the downward price movement. Now, earnings season so far. Now, earnings season in terms of the banking sector, we're in the heart of earnings season for that sector. But really, when we're looking at earnings season for other sectors, such as retail and such as the technology market, we really haven't seen any significant data pretty much released. I've got a question, so I'll quickly answer this question. What does UK inflation mean for the pound against the US dollar? Ladies and gentlemen, it means very simply the traditional orthodox price movement and influence that we see in the market. The higher the inflation, the more chances there's going to be bullish price movement for the currency. But keep in mind that inflation data was a few days ago. Today, we actually saw the UK release their retail sales. Their retail sales declined at its fastest pace in 2 years, which is why when we're looking at the pound against the US dollar, we're seeing a strong decline. So that strong decline is actually being backed by fundamental factors. So it's not just about inflation. There is other economic data that we're going to look at as well. And this is also why technical analysis is so important when being paired with fundamental analysis. We're going to look at technical analysis in a moment as well. So these are the earnings that we have seen so far this week. Now, people may say, we've seen significant declines, judging by this, over the past 4 days. And there's a reason why I've put this here as well. And then people may say, but I'm looking at the NASDAQ and I can see it increasing continuously. We've increased to the highest that we have ever been at. So why we're not seeing a decline on the NASDAQ when we're seeing big declines on most of these stocks? Keep in mind, none of these stocks are part of the NASDAQ. Whereas if you're looking at the Dow Jones and the S&P 500, you are looking at weaker price movements throughout the week, generally speaking. Yes, we've seen some bullish volatility, though, towards the end. Now, when we're looking at earnings, most of the earnings have been mixed. If we're looking at earnings per share, all of the companies saw higher earnings than expected. If we're looking at revenue, some of them saw higher, some companies saw lower. Nonetheless, all the stocks declined. So you can really see here, ladies and gentlemen, the sentiment in the market. Yes, we haven't really seen it in the technology market. And to be honest, even when you're looking at the Dow Jones and the S&P 500, which has seen bullish price movement over the past 24 hours, it's largely being driven by technology-based companies rather than the rest of the market. So again, this is the reason why we've seen some really negative price movement, but when we're looking at indices, actually seeing some stronger price movement. Now, the other thing I wanted to mention is you really have to be cautious about upcoming earnings because it can really change the sentiment amongst investors. Look at this stock price movement because of earnings. Now, if we go to next week's earnings data, we have Netflix, which is very important. If we look at these 4 companies here, they're all, generally speaking, important for most indices, but they are all part of the most influential stocks of the NASDAQ. So when we're looking at these companies here, ladies and gentlemen, keep in mind that they're significant and very influential, especially when you're looking at Netflix and Tesla. Now, of course, if we're going to get negative earnings from these individuals, from these individual companies, and we're going to start to see declines like -7%, -4%, -4% again here, like on Charles Schwab. We're going to look at that scenario next week as well. Again, the sentiment in the market is really going to start to change. And towards the end of the week, are we still going to be seeing investors willing to purchase the Nasdaq at such an expensive price when a lot of these companies, and these four very influential companies for the Nasdaq, are actually seeing lower than expected earnings? And if we look at the price movement of these companies over the past 5 days, Tesla, which is in the top 10 most influential stocks, declined by 8% this week. 8%. So that's a significant decline. If we look at Netflix, which is in the top 20, it's 1.5%. So nothing serious, but nonetheless is a decline. And if we're going to see negative earnings, that decline may start to look like -8%, like we're seeing on Tesla. Then if we're looking at Intel, again, it's in the top 20. Here we're looking at just over 1.5%. If we're looking at T-Mobile, we're looking at just over 1%. It's the only stock that is expected to release earnings next week, which saw actually over the past 5 days an increase in value, an increased price. Now, there are some other companies such as Lam Research Lab, which saw a lot of bullish price movement. That is part of the Nasdaq, and expected to release their earnings next week. But then it's not one of the most influential stocks. It has a lower weight compared to this company. So this is a reason why I haven't added it here. Now, something which is very important for people to do when they're analyzing the stock market is actually to also be looking at components individually. So here I've actually got this from Google. I haven't gone onto one of my platforms which is connected to the CME exchange or connected to all the flow charts and so on and so forth. This is something which is free, easily accessible from you just by going to Google, typing in the Nasdaq components, and this will actually show you the most influential companies. So you can see here they're ranked. Why they're ranked? Because it shows which are the most influential, and it's the most influential very simply because here it says what percentage of that company makes up the index. So for example, within the fund, 8% of the fund is Microsoft stocks, 8% of the fund is Apple stocks, for almost 5% is Amazon stocks, and so on and so forth. Now, if the most influential stocks are increasing in value, then of course there's high possibility and opportunities in the market that the Nasdaq and the USA 100 is going to increase in value. So this is actually taken yesterday. Yesterday we saw, like again, I said, the Nasdaq increased by more than 1.5%. The Nasdaq increased to the highest price that we have ever seen the Nasdaq at. And if you look at this chart here, you can see that from the top 25 most influential companies of the Nasdaq, only 2 companies declined in value. So you can see here that if we're looking at the Nasdaq, the top 25 individual companies, top 25 influential individual companies, only 8% decline. So of course you can see real demand, buyers controlling the market there. And if you were looking to take opportunities and look at signals to speculate and open buy positions yesterday, you would have been a very profitable trader. Now, the same thing applies here though, ladies and gentlemen, as well. This is from yesterday. Every single day, look at this chart again and again and again, because it will show you again these components which are driving the Nasdaq. Are they increasing in value or are they decreasing in value? Because if it's all green like this, then of course you can use that as an indication and say to yourself, I'm going to look at where there's opportunity to buy when you're on the MT5. If all of these are red, or most of them are red, or let's say 70% of them are red, then again, go to the MT5 and you see if there's opportunity for you to sell. Now, what is really driving the upward price movement over the past 24 hours? Again, I mentioned to you we saw a very discounted price towards the beginning of the week. Yes, it was warranted because central banks, bankers, economists all came out and said people are overpricing the stock market. We're not going to see 6 to 7 interest rate cuts this year. We're not going to see an interest rate cut in March. And they really pushed back on this. So it was warranted. It was really changing the sentiment of investors. But as the price declined to a very low price yesterday, then buyers re-entered to take advantage of the discounted price in order to be able to enter and be exposed to the market for next week when earnings season starts. Because next week and the week after, especially the week after next week, is the heart of earnings data for the Nasdaq and for the technology market, as well as for the S&P 500. In addition to this, we saw a lot of economic data, which is really indicating a soft landing. So earnings, sales increased by 0.6%, very high, more than double that which was expected. And core retail sales also increased by 0.4%, which again is very high. When we're looking at the unemployment claims, ladies and gentlemen, very simply was at a 2-year low. So when you're looking at unemployment claims, it's released every single Thursday, every single week, and it confirms how many more applications there has been approved for individuals to receive unemployment claims. Now, the lower this figure, the better, and it's the lowest that has been in 2 years, ladies and gentlemen. So again, that's really indicating that there's demand in the market, that the economy is growing, the economy is stable, the economy is resilient, and the employment sector is resilient. Now, there's two sides, though, of this story. If these aspects of the economy are going to create higher inflation, because, of course, the higher the demand, the higher the possibility there is of inflation. If this is going to create higher inflation, then this is actually negative for the market. It's not positive, even though at the moment it's triggering buyers. So the next major economic data, if we're going to ignore the earnings data, which is going to be released next week, the next major earnings data will be, and again, if we ignore today's data, it will be the PMI, so Purchasing Managers Index, next Wednesday on the 24th for the US, the UK, and the European Union. So, ladies and gentlemen, let's go to our MT5 now. So bear with me. Ladies and gentlemen. So let me share my MT5 now. So if everybody waits just a second, hopefully people will be able to see it on their screen. Hopefully everybody can see it now. So I'll start looking at technical analysis. Now, if somebody's got an asset they want us to look at, feel free to interrupt me. But what I will start to look at first is the US 100, the USA 100, US 100, depends if you're trading futures or a different type of derivative. This is also, of course, relevant for individuals actually trading the NASDAQ. So if we have individuals buying ETFs or so on and so forth, then of course this is also relevant for you as well. Now, this is a very simple setup. Now, what is this setup formed for? This setup has been put together for two reasons: to give us an indication of the price sentiment and to give us an indication of whether buyers are controlling the market or sellers are controlling the market. Now, this is very important even for individuals who are trading in the ultra short term. So even individuals looking to scalp, individuals looking to open trades, keep it open for 24 hours or only within the session, this setup is extremely important. Now, here we've got a 75 bar exponential moving average. So if you go to insert, you go indicator, you go trend, and then you go moving average, you can see here, you can enter 75 exponential moving average, and you click OK, and it will appear on your screen. I've already had it added, and I've got it as a color green. Then you've got here a relative strength index, and it's got a period of 20. Now, at the moment, we're at a very high price here. We've seen the price decline over the past 2 hours, but nonetheless, we're still higher than the day's open price. So what are the indications we're currently getting at the moment? Ladies and gentlemen, we have crossed above the significant resistance point. But when we cross above a significant resistance point like this, because it's not just a resistance point that we've actually seen being triggered once, it's actually been triggered on 4 occasions. So this is a significant resistance level. When we increase above a significant resistance level, a lot of the time, ladies and gentlemen, we actually will decline back to that resistance level. Even if we're going to see an upward trend over the next 7 consecutive weeks, a lot of the time we may retrace back to that breakout level and then continue the trend. So number one, we have to take that into consideration because that is a very well-known characteristic of the market. But of course, we will have to get a signal of that on a smaller term time frame, which we'll look at in a moment. Now, if we ignore this factor of the market, because that's part of wave analysis, the other thing for us to take into consideration is that the price is very high. We've managed to actually get here, because this is a 2-hour chart, we got here actually 22 bars. So we're looking at 44 hours of the price increasing in value without seeing a significant retracement. So this is indicating to us that buyers are strong in the market and they're holding on to their trades. Now the price is above the sentiment line, we're above the breakout level, and we're also above the 50 but below 75 on the oscillator. So ladies and gentlemen, this is indicating to us that this price sentiment is very high and strong. It's indicating to us that we're still forming an upward trend, and it's indicating to us that potentially buyers are controlling the market. This is at the moment. This can, of course, potentially change. So when we're in a scenario where we're above the RSI, we're above the neutral of the RSI, we're above the 75 bar EMA as well, then we should be switching on to potentially a smaller chart to see if there is opportunity there to enter. Because of course, when you're entering on a larger chart like this, it's taking into consideration a lot of volatility that can be very difficult with leverage. So if we switch to a smaller time frame, then it's more easier to pinpoint where potentially we can trade and where there's opportunity in the short term when trading with leverage. Now, I want to give individuals an example where there's sell opportunity within the market, because yes, we've identified that in this area of the market there's been a lot of buy opportunity. This, ladies and gentlemen, between the 2nd all the way up to the 8th of the month is where we had a lot of opportunity for sell trades. This is very simply again because we're below the 75 bar and we're below the 50 here. So again, clear indications for sellers and a clear indication for where there's opportunity to sell and speculate the market. Then, ladies and gentlemen, another thing for us, bear with me. There we go. Another thing for us to take into consideration is now I've gone to a 5-minute chart. Now, ideally, we want to be looking at upward crossovers. Why is that? Because we don't want conflicting signals. We want where there's signals, both on the 2-hour and the 5-minute, which are indicating in the same direction. So we've established indications at the moment. Yes, it's only an indication, but this is the idea behind technical analysis. The indications is that the price is going to increase. Now, if we look at upward crossovers in that period of time, so we've got an upward crossover here, we had an upward crossover here, then we had an upward crossover here, we had also an upward crossover here, and then the latest upward crossover was up here. Now you can see the first 4 occasions where we had the signal were great signals, and the price really did strongly increase in value. Now the latest signal, it started to increase in value, it started really well, but then we got a retracement. So it's only a retracement at the moment. We still need to be patient and see if we're going to see the price start to increase in value, because we also need to take into consideration the market isn't going to open for another half an hour now. So keep that in mind. If we are going to see another upward crossover, if I zoom in here, ladies and gentlemen, let's get rid of this here. Actually, we can keep hold of that if it makes it easier for everybody. So we can see downward price movement, downward crossover. If it starts to increase in value and we get an upward crossover, then there is another indication for buyers to re-enter the market. What individuals can also do is use the Fibonacci levels, ladies and gentlemen. The very well-known significant level in the market is 61.8. So I've used the Fibonacci levels on the previous downward swing. So if I'm using that, if the price is getting an indication that if the price increases above 17,239, then we have an indication that the price is going to continue upwards. At that point, it is possible as well that we'll get another bullish crossover. Now, if we switch over to another time frame here, we're looking at a 30-minute time frame. This is a two-zone regression channel. If we're above the orange or within the orange, we have an indication of a trend. Ideally, we want the regression channel to be pointing upwards, and ideally, we want it wide. At the moment, the regression channel is becoming thinner, and we're trading within the trend zone. So it's still indicating that a trend is possible, but we want the regression channel to widen, and we ideally want the price and the candlesticks to cross above this regression channel. So for example, like we saw in this area of the market here, that would be an indication of strong momentum. And again, it provides signals and more potential opportunity to speculate upwards. But if it continues to decline and we actually decline below the red, okay, then we actually have indications that we're maybe going to see a correction. Now, if that is the scenario, ladies and gentlemen, like I said, we can use this area here, which is the breakout point in the market. So, ladies and gentlemen, this is the NASDAQ. What I will also say, like I always say, is it's important to look at the components. So go to Google, type in NASDAQ components, and look at the performance of the market and individual stocks, especially the most important stocks. And then the other thing to take into consideration as well is, of course, economic data. And the last thing I will say is, how is the rest of the stock markets performing? Today, for example, European stocks are declining, Asian stocks are declining. Then you can use that as an indication that actually sentiment today is quite low. Yesterday, we said together that sentiment was very high, potentially, because we had German indices increase, French indices increase. We had Chinese, Hong Kong, and also Japanese indices also increase. So we were saying, as part of our market analysis, that that's a possibility that may continue with US indices, and that is what we did indeed see. Now, I'll also look at the pound against the US dollar, because somebody mentioned that before we end this live stream. So we'll quickly look at that. Bear with me. Let's find the pound against the US dollar. There we go. Here we are. So here we're actually getting a sell signal, ladies and gentlemen. So we can see the price is below the 75 exponential moving average. The only thing which is a concern is we're still forming an upward trend wave pattern. So you can see here we have a high, a higher high, then a higher high, and then you have a fourth higher high. Then we've got a low, a second low, and a third low. Each low is higher. So we have higher highs and higher lows, which indicates an upward trend. Nonetheless, though, we're below the sentiment line and we're below the neutral on the RSI. So both indicates a potential decline. Though ideally, of course, we would like to see the price decline to a lower low. So at least to decline below this level, or even better to be declining below this level here. So that is something for us to take into consideration. Then, of course, we can switch over to a 5-minute time frame, and we can look at crossovers. Latest crossovers, ladies and gentlemen, are downwards. So even though we've really lost momentum here, okay, over the past 6 hours, all the crossovers are mainly downwards. And also when we're looking at the MACD, we're mainly below the neutral on the MACD as well. So, ladies and gentlemen, that brings us to the end of today's live stream webinar. You can, of course, go onto our website, go to Google, type in HF Markets or HFM, And of course, you go directly to our website. You can register live for free. You can have a demo account for free. We have a mobile app for free as well. You have free educational material and free webinars as well. So that comes to the end of today's live webinar. Trade safe, trade responsibly, always. Enjoy the rest of your weekend and your day. And hopefully we'll see you very soon on one of our next live stream webinars and our next in-house webinars as well. In the meantime, goodbye.